Yeah, I think a couple of big ones, Karen, in terms of the engines of growth for Credit Suisse itself and those that Thiam have been promoting. I think Asia Pacific will be disappointing to those who have seen this bank focusing on generating high net worth return for the wealth management business out of Asia. Obviously, there is also the investment banking side in Asia. And whilst the bank itself has pointed to an uptick in activity around M&A advisory fees, there are issues about the performance of the global markets business, and I think that will have raised a few concerns. I mean, we know that it's been a tough quarter, so I guess we can give the bank that, but perhaps the investors who've looked at these numbers this morning would have liked to have seen Credit Suisse more opportunistically perhaps benefit from some of the volatility in capital markets. And of course, the big issue has been the decline in fixed income activity by clients. And Thiam himself pointed out that client activity through the third quarter has been lower than they would have liked. So what does he see for the markets going forward from here? Let's just have a listen to what he had to say in answer to that question when I sat down and spoke to him on the earnings.
There's a disconnect between the condition of the economy, if you wish, and the psychology, the mindset in markets, which is a bit fragile, as I said. People feel that equity market valuations are high, so they are very hesitant to come in. They feel that interest rates are going to go up, so fixed income feels risky. And you see a kind of bear market. What you see in a bear market is that you see big volumes when the market goes down and small volumes when the market goes up, you know. And that's kind of what you're feeling now. So that nervousness comes through the numbers. And then I think the surprises, the geopolitical uncertainty, the issues on trade, all that creates a difficult climate. So we are cautious, which is why it goes back to our whole strategy, which has been to de-emphasize the more volatile parts of our activity. Geoff, I can tell you, in a quarter like this, the old Credit Suisse would have lost hundreds of millions, and that's easy to demonstrate. Today we're making a profit, 850 million. That's because we de-risked massively. We'll give the numbers this morning, but we cut our inventories anywhere between 40 to 60% in all our fixed income portfolio. We de-risk massively. We have less risk, a stronger, more capital, a stronger balance sheet, you know, and we got rid of our legacy. All the RMBS and all those issues are done. So we're coming into this environment with a kind of clean balance sheet, solid capital, low risk, and actually, personally, I don't mind because I think there are also opportunities.
Now, I think Tidjane Thiam will be frustrated with the performance of the share price. He feels that over his 3 years in the organisation, he's done more to make the bank more resilient and to improve the quality of the earnings profile, as the market would see it, by relying less on the investment bank and global markets revenue lines and focusing more on the consistent wealth management drivers of growth for the bank here, which throws us neatly forward to the question of what they're going to announce on the Capital Markets Day, the Investor Day that they will hold in early December. I asked Tidjane a direct question about, is it time to now start giving some capital back to shareholders? Is there a way that they can boost capital returns to investors by perhaps announcing a modest share buyback program? What I got was evasion and a no comment at this stage. So I think that throws us neatly forward to what we might expect in terms of new targets coming out of this bank next month, guys. Back to you.
Hey everybody, it's Hadley Gamble from our new CNBC Middle East Bureau in Abu Dhabi. Thanks for stopping by. Now to watch more, you can try one of the videos that just popped up on your screen. And don't forget to subscribe.